Boom, we're alive, ladies and gentlemen. This is Tio and the Arcane Bear. Thank you all for joining us on another lovely episode. We'd like to dive into all things crypto and learn as much as we can during these exciting times. It's really important to make sure that you're constantly going over conjecture, and sometimes it's best to maybe even argue against yourself. So we're going to go over a little something for all of you out there in the ether. We're going to actually be taking a look at a little document that one of our private bear members sent us. Shout out to them. So boom, this is called Bull and Bear Markets. It's a historical trend report by Invesco. The reason I wanted to go over this today is just for general sentiments around when bull markets start and how to take advantage, or if you should take advantage of those profits during those moments. So I'm just going to read over this, I guess, very briefly to kind of start the episode today. So with market volatility being a main concern among investors, it is important to review historical trends to put market volatility concerns into perspective. As this chart shows below, bull rising markets, shown in green, have been longer and more sustained than bear declining markets, shown in red, and that the effect of market volatility has on your portfolio may be minimized with long-term outlooks and an investment plan. This sentiment we've gone over before. One of the key elements around this is the idea that if you had bought Bitcoin at the all-time high of $1,000 and just waited and been patient, and then it went to 20 grand and now around 60 grand pretty much, patience is one of your best hallmarks in building a portfolio, because you can literally have done nothing and come out on top by following this type of mentality. One of the original documents we went over this idea is the best investors are dead sentiment, which goes over the idea that people who had been building their portfolio and then just not touched it had done really well. So I just want to kind of go over a few more ideas. I like what they hear. Again, for those of you that don't know, I'm sure you do, a bull market is a prolonged period in markets where investment prices rise faster than the historical average, typically characterized by a stock market rise of at least 20% from its previous low. Well, we're well over the 20% from a previous low. Next thing, the bear market, a prolonged market period which in investment prices that fall. Now, one of the reasons why I use the bear as an emblem here is because it's when the market prices are low that we want to be accumulating, and the bear is actually the one who is usually the most successful because they're in the market before the bull. Now, I know that's contradictory. People think bears just want the price to go down. No. The prices are when they're down. That means I can accumulate more and build a larger portfolio during those times, and in the bear market, learn to readdress and reassess how the portfolio is put together. So, obviously, the bear market is a prolonged period which investment prices have fallen, typically by 20% of its previous high. So here's the historical performance of the S&P 500 index during bull and bear markets: 49% up, just 6% down. 70% up, 22% down. 36% down, 73% up. And then here you've got a big jump between 90 and 2000 from the tech market, which is 587% up, and then 40% down. So we have this kind of ebb and flow of markets, or at least have had ebb and flow of markets for quite some time. Now, Bitcoin, our predominant market leader right now, has been in a very strong pattern for quite some time now. For those of you that have joined the channel new, you will have missed this part, but we'll go over it with a little bit more of an eye on the long-term and kind of macro perspective. So if you go back, you can look at all my videos back in August. And I was like, guys, we're in a bull market. You might want to be loading up on as much as you can here, basically. It was this moment back here when Bitcoin was at $11,000. And the reason we were so interested in this was because in our Wyckoff trading studies, we were following this accumulation pattern. Now, accumulation patterns are the bear markets. That's this whole area down here where you could have done nothing but just accumulate on a day-over-day basis. Any price within $13,000 now looks like a genius price. That's important to remember. Again, when we're trying to make conjecture, we're trying to look at as many macro perspectives as possible. So that includes not just the price tag of where we are today, but also how we got to where we are today, because that's an extremely important part of the story. We're very high up right now. So how did we get to where we are today with these massive SOSs and LPSs really just driving us through? So this nice long accumulation pattern between 2019 and 2020, effectively November is when October is when we finally started to leave, and with a serious amount of momentum, this was the area of accumulation. Now, we've gone over this a few times before, but general market sentiments are actually idealized by this very kind of layman's characteristic of this nice S shape, where you have an accumulation period down at the bottom, you jack the price up, and then you have distribution as people sell. And now you can see that in the past here, you have the 2014-15 bear market cycle, where you could accumulate at lows, and then you have a massive run up, you hit distribution, the buying climax, and then the market is effectively over for the next 3 years. Between January 2018 and September 2020, there wasn't a whole lot going on other than just accumulation of this asset, Bitcoin, for that period of time. Since then, we've seen explosive growth out the top. So if you were entering today, you were entering late in the market, first and foremost. We've been charting and practicing this Wyckoff stuff for quite some time. And back here in this trading range is the area where you wanted to be accumulating. That's why your educational point here is so important. It's because we will go into a bear market cycle. We will hit another period of distribution. And to get to one of the more poignant questions, what do I do? How should I take profits? And when is that a viable thing to look at? Well, number one, think about it like this. Had you bought Bitcoin at the all-time high of 2017, it was only a bad idea for around 900 days. 900 days later, you're in profit almost double again, if not actually more, just a little bit more than double here. So you could have bought here, not touched it, and still been in profit here. Same goes back with the 2013 high when we were way down here at $200. You could have bought $1,000, waited, and eventually been right. Now, that's not always the case, but it's good to remember that that's a possibility. For those of you like, oh, when should I take profits? Well, maybe you shouldn't. You might not get back into the ecosystem, and that's a big deal. Not getting in the market is as bad as not having entered in the first place, even if you took profits, unless you absolutely have to. So if you're new to trading and investing, first off, probably don't trade. Don't listen to anyone telling you trying to get you to use leverage if you're new to this ecosystem. You're just going to lose money. I feel bad to some degree about that, but it's not. I have nothing to do with it, so I don't feel bad. But more importantly, if you're new here, you can pretty much just focus on accumulation. The bull market cycles last longer. Now, one of the things we haven't seen in Bitcoin is the length of the bull market lasts longer. Our previous accumulation range was around 11 to 1,200 days in 2013, 2017. And here, the bull market only lasted 334 days. This time, from our primary support to our breakout, our first LPS, you had around 700 days from selling climax. So part of the question, and one of my assumptions has been that we're going to get around a 300-day bull market, which is why I've kind of jokingly said we're 7/14 the way through the bull market at this moment, or 8/14 the way through, because we only have 120 days on deck, approximately halfway. For me, I think the real explosion in the market is going to come from the March springtime onwards and the euphoria that comes along with this literal spring that we have. So I think that the next question is, how do I take profits? Is a twofold question. Number one, should you even be taking profits? Are you young? Are you able to generate revenue? Are you building businesses? Are you interested in building businesses? Or do you work with another team that's building a business and you're happy doing that? Because if you're generating revenue, you can probably just accumulate and not worry a whole lot about whether you're buying or selling, and over the period of time, do really well. But if you start to get really good at recognizing these cycles, you don't have to buy at the tops. You can take profits there if you wish. Again, none of this is financial advice. We're just trying to help educate and share our journey and our process from when I bought Bitcoin at the all-time high of $1,000. Oh my God, you're so silly. Magic internet money, it's down to $200. What did I do? I bought more at 400, 600, 800, 1,000, 3,000. And then I was pretty much spent. I didn't have any extra capital back in 2017. But now, a lot of you guys are, a lot of people are entering now, finally, right? They bought at like $30,000 Bitcoin. Cool, great entry so far. Better was back here, but now you're learning. You're at least starting to educate yourself and recognize that there are market cycles that even take place. A lot of people don't even recognize that there is a market cycle at all. They just go, yeah, it's a bull and the bear market. Well, how do you identify them? That's one of the most poignant aspects of this study is, well, here's how you identify an accumulation range and when you should be accumulating that asset versus when we start to get into an area of distribution. And as you can see, we've actually seen some distribution already. Not large scale. These are what we like to call micro distributions. And you can see this massive amount of supply that came into the market here on January 12th and sucked the market down here to around 30,000. And then we've seen this massive growth off falling supply. These are still very bullish indicators in my mind. And as we look to the smaller time frames, we can start to kind of decipher the idea of, oh, well, when should I actually take profits? So currently I'm using the area chart just because it's nice and clean. Like how simplicity can provide a more realistic viewpoint without getting caught up in the hype and the FOMO. This bull market will end eventually. So when will it end? Right now, we've broken out of our trading range that we've been following for quite some time and through the top. Now, this type of reaccumulation schematic 3, we've gone over once or twice before, and I think it's probably important to go over again. I got to remember to pause this in the back here because YouTube is just sucking data back. Okay, yes, reaccumulation schematic 3, where we start to close just above the top of the box here. This is what it looks like right now, because it's basically like hunting an animal out in the wild. The footprint isn't exactly the same, but look at the characteristics here. We have many similarities to our breakout above the creek and where we're holding right now, which is just above this new area of support and resistance, something like this. That's like our creek, basically. So because we're in a bullish territory so far, as long as we stay above this resistance, I believe we're going at probably $100,000 Bitcoin by August. And I think we're going to around $200,000 Bitcoin by the end of this bull market cycle. That's just my rough supply to demand relationship conjecture based off the time we were in the accumulation and the potential that we have for going up that much higher. So this clear jump across the creek here at around 38,000 signaled the start of a new bull move out of this trading range. We see falling supply and the rising price, very, very nice indicator that we're looking for. But more importantly, as we go into the smaller time frames, we start to be able to use this data to learn at a more quickened and like, let's say, paced momentum, so that right now I can jack up some momentum indicators. And I don't actually suggest you guys use momentum indicators, but it's always fun to make conjecture with these colorful things, you know. So right now we've been staying just above our Bollinger Band here. We're just kind of cracking below it now. We need to probably retest this resistance. I thought we were going to come back down to 44,000 to retest here, but now the bottom of the band is right in the middle of this in the whole backup phase itself. Maybe the test is only around 47, and each time we get up higher, what we're starting to witness again is that these reaccumulation schematics do not look identical. It's not like, oh, it's going to do this perfect thing where it comes back down here like this right to 44,000, because it is always this way. No, you're literally hunting a giant animal out in the wild. This is a multi-trillion-dollar beast potentially, right? So what we're doing is we're stalking our prey. We're watching its footprints in the ground, and they don't show up exactly the same. But we can tell, okay, this is still one of our bullish breakout patterns. So we keep our bias. We remember that even though we're high up, we're still in a bull market. And we think to ourselves, okay, well, when am I going to take profits? And how would I do that? Well, this is different for everyone, and I can't give you advice. But what I can say I'll be doing, and what I have done, even before I started any interest in being an investor, was I would usually try to cap out my budget for 3 years so that I knew like my business could fail and I could start back up, build, and make it through time. And I think that being able to plan and budget your life on a 2 to 3 year basis is a mindset I got from being an entrepreneur, where we had done so successfully 1 year and then had no revenue the year or two after, trying to find new things to do and build and offer new products and services. Sometimes you have smash out of the park years, and sometimes there was not a whole lot going on. So I got used to hitting these kind of budget quotas and marking my life out in my like quarterly reports. I'm like, okay, well, I've got to make it this far to do this next, and how many days do I have until we can like make it? And luckily, but flying by the seat of my pants has actually rewarded me quite well. But It's always been somewhat of a conjecture. Well, when do you take profits? Well, it's kind of a manageable purpose of where are you in your life. You could literally just be accumulating and not have to take profits, not worry about being out of the market and not trying to time it at all. You could literally accumulate every step along the way and it averages out. And this is a really good function to remember because these documents we go over, the best investors are dead, how to time the market perfectly, we see some key characteristics that can help everybody do better. And that's what I think we're all trying to do in these markets is do better by not just being in the market, but being able to capture the value that each one of us might need to take from when the market cycles are over. So I don't think we're near a top here at all. You guys had asked us in yesterday's video, and my thumbnail creator, I told him, I'm like, yo, Charlie P, just make whatever you want, and I'll just make a video around that afterwards. So you can make like, we don't even got to talk about the thumbnail. I'm like, if you make a thumbnail, I'll just make conjecture around the thumbnail. Whether I believe it or agree it or not is kind of irrelevant. I can make conjecture around the idea at least and share my thoughts and opinions. So I'm waiting for quite a bit higher of a markup here after March. I'm looking for closer to August, December, January of 2021, finalizing before we start to see real peak out moments where things kind of start to break down. And that's usually from a lack of purchasing pressure coming into the markets. And so far, what we've been seeing is a severe lack of liquidity where all the Bitcoin has been leaving the markets, the supply has been leaving the markets. And because of that, we've seen this massive volatility spike upwards. So because everyone's different, everyone's managing their portfolio differently, a lot of you are already under the mindset that what you want to be doing is using these accumulation ranges to figure out when to make the best entries, not necessarily when to make the best exits. The best entries were way back here when we were down at $10,000, and that was very clear for anyone who was studying with us, right? Well, here's your spring and your first reaccumulation range, and then a micro distribution for a rising gradient bottom above the POC at that moment. That was a hugely bullish moment. Again, you can go back and look at our videos here in September and August, September, and I'm like, guys, this is the bull market. It has started. Like, we are here. Although I thought we'd go 19K, 12K, and then 50K. We didn't even come back down to $16,000. There was just so much buying pressure on the way up this cycle. This trading range that we're in now is the first time we've seen a change of character since 2017, and this is why it's kind of not a scary moment, but it's at least a moment to check ourselves and be like, hey guys, look, we are really high up here since March, right? Recognize that the volatility here can happen in either way, and even if you do end up in a position, remember what the bull market offers on the long term, not just the short term benefits. It's really through time that a portfolio pays off these massive yields. It's not like overnight. So patience here will be one of your strongest drivers for success. So my exit plan is based off my own needs and desires, but I'm not thinking about that until we go much, much higher. I hope that was helpful for you guys today. We'll take a quick brief look here. Ethereum is also doing quite well. Right up in its backup phase, above the box, we're seeing strong signals. The weakness in demand right now is kind of indicative of just an unknown moment in the markets. And in the private newsletter, which you guys will get an update of tomorrow, we go over the VIX. So I like to use the VIX to basically take a look at the general market sentiments. And we've kind of gone over the VIX and the S&P 500 before, but I'll go over this again here now. We've been in a descending channel for the volatility index here as well. We'll move this, which is quite nice to see because this is kind of the average. We've been on a really high breakout trend of volatility since the start of 2020, when obviously the pandemic, riots and protests and new presidents and maybe not new presidents and all this nonsense has been just jacking up the fear in people's minds throughout this process. But we are now consistently riding below that rising trend line we were on for quite some time. And now we're finding some solitude and some sanity. And I believe that as the markets find more of that sanity and solitude, you're going to see a big price spike upwards. So another little bit of a conjecture here is the S&P 500. we've been following this trading range in the S&P 500 for quite some time, and look, we're in a bullish breakout moment for the S&P. We had charted this, and I remember I've been trying to tell people, I think that we're going to see a market melt up. I don't think we can even take a market melt down anymore. I don't think that the world could handle it. I think if we were to have a market crash like we did in 2008 and they were just to not fix it, everything would break into collapse. There would be not enough liquidity. Everyone would be super hurting. It's better that they just print money. Now, print currency is probably the most important part to understand. That is not money, printing currency. So when we are witnessing the older markets still make higher highs, higher lows each step of the way, what are we up? Only 11% since November, right? So obviously you want to be in our sector, but nonetheless, this rising price of the S&P 500 should not have been expected. We're hitting new all-time highs in the S&P 500. And this is also likely a measure of kind of instantaneous inflation. The fact that people for the first time are realizing that prices of assets are better than currency. And I think that they're basically trying to hit bigger companies who are sitting on massive cash reserves, saying move that cash and get yourself assets instead, because acquiring more assets is kind of a way to look at the fact that currency is not money, right? So they're forcing all these big players to finally realize that, yeah, guys, currency and money are totally different things. So this movement of the price cycle in the S&P 500 to me is indicative of what I believe to be a melt up, and that it will continue, where the market will just keep creeping upwards, almost as an indication of some type of inflation at that point. So back to Ethereum here, with even this slow growth kind of breakout top that we're witnessing into our backup phase and this falling supply range, we're just at an indecision point right now. People want some clear market indicator. Probably a stimulus check is one of the things I would be assuming that comes in, where this just all goes thoop and breaks up. Now again, when we're up this high, notice the similarities between Bitcoin and the schematic 3 here. We could be about to witness a quick little breakdown back to this primary support line here. We've talked about that a few times, is that again, because we're witnessing an animal kind of like run through the wild, its footprints aren't going to look identical. So we have to be ready and prepared for when that last toe hits the ground here. Oh, excuse me. So we kind of keep a constant eye on the way the prices fluctuate so that we can learn as much as possible. Because on a day-over-day basis, there is always something new that we can garner from what the markets are telling us. The previous day, on the 17th, we jumped from 1750 all the way to 1930, right? Ethereum was just not that far behind, making a 13% run outside of its box. And if we go back to the Heikin-Ashi charts here with Bitcoin, we saw that very similar kind of move, where from the bottom outside of the box, you had a 12 to 13% run. Bitcoin and Ethereum have been moving pretty much lockstep together. It's not like, oh, Bitcoin goes up, Ethereum goes down. No, Ethereum has actually gone up in gains and percentage-wise faster. So this is really important. It's really important to study, I think. A lot of people they would rather watch Netflix and not think. And I feel sorry for them. I love my closed eye meditations. I love coming up with new ideas because I'm constantly building conjecture. So my main point is always to try to garner some new information, and it's difficult. It's not always easy to find where's the point of contention or the point of tension in the markets today. And I think when we start to look at some of the other alternative digital assets, we've gotten a lot more of these really great learning lessons. Here with Link especially, was just the time that it takes, right? Here you've got December 23rd to the price cycle of where we are today. So you just take a simple measurement, 23rd to where we are today, as well as 222%. Okay, well, what about Bitcoin? Well, we go from December 23rd to where we are today. Well, that's 123%. Well, so you would have done twice as good being in Link from Christmas to today than you would have being in Bitcoin to today. But that's only alpha percentage today. We don't know what the future holds. So Link and these other plays remind me of like very beautiful venture capital plays, which is they're asymmetric in nature. They could be worth nothing, or they could be worth 100 or 1,000x more. And I kind of place my bets based off this type of conjecture. I think one of the most stable parts, one of the things I've learned the most about is the relevance and the value of something like venture capital and how to play like that, because it's such a smarter way to play. When you have these asymmetrical gains, which is what Bitcoin is in the first place, it could be worth $1 million or it could be worth nothing. Okay, well, that's great to know. What else works like that? Well, and you'd be surprised. There's a lot of things that work like that as well. It's not just Bitcoin. It was never just Bitcoin. If you had $1,000 in Twitter, sure, it didn't perform as well as Bitcoin up to today. But at seed stage, maybe, right? Because you couldn't even they're not charting seed stage entries on Twitter or Facebook. For those of you that don't know, this is kind of a side conjecture. Check out David Cho. If you guys don't know who David Cho is, he's an American artist. I really like his stuff. Looks fun. It's kind of my style, like fits my kind of style. He painted the Facebook, one of the Facebook offices in the early days. What's his net worth now because of that? So he painted one painting for Facebook in like 2013. And right, okay, so here you go. He's now worth $300 million, and this is old. I'm pretty sure it's close to $1 billion because of one painting that he did for Facebook. So don't underestimate like what a venture capital idea looks like. This guy did one painting for Facebook, and now he's worth about $1 billion because of it. Congratulations, David Cho. I love your story, and you're a fantastic artist as well. So don't neglect what a small amount of money can do in a marketplace if you're in early seed stage. And that's where David Cho was entering in Facebook. There was no public offering of Facebook yet, and that made a huge difference. Tom Biddy says, with a super chat here, that was a great answer about taking profits. I'm still young and won't need much for the next few years, so I'm happy to let most of my BTC sit through the bear market and also accumulate more. Great, Tom. I'm glad to hear that you're young and learning how to invest. That's amazing. One of the most intelligent things to do when you're young is just practice accumulating more and not having to let go. That way, if you're like, oh my God, I need more money, I got to sell my Bitcoin. No, if you need more money, go to work, create more value, generate more wealth, and accumulate more assets. And over your lifetime, you're gonna clean house, Tom. So welcome to joining the area so early. Shout outs to artists. Glad we still exist. Yeah, right. Yeah, I know. You gotta love people like David Cho. Definitely, guys. If you've never heard of David Cho, go follow him on Twitter and Instagram. He's one of my favorite people to follow. I love the weirdos, but that's my own sentiment. Cardano was another great example of this. Here we see so many similar structures. This nice rising wedge breakout pattern we've followed many times and into a new trading range, and it's actually been very, very strong. Look at that massive wick that came down. We barely even touched the primary support here on Cardano before we started to move up. Again, we had wick down, 30% to the wick down, but that wick got chewed up in like a half of a second, 13% almost in a half of a second, chewing this kind of stuff up. It's absolutely fantastic. So here, Avalanche looks very similar to Bitcoin in the primary parts of its last reaccumulation. A bit of a bigger spread than I had anticipated. I took my entries here at $44, so we're just sitting right underneath that, which is always a little. You're like, oh, so close to nailing that entry at $44, but it's still just below my entries. Go black. Anyways, Avalanche here again, looking like a very beautiful supportive trading range. We've got our preliminary support dragged all the way back to this line here. And our automatic rally, big price spread. This was mostly caused by some of the on-chain problems, but also we've gone over the idea that a lot of the times the best time to be acquiring an asset is when people think there's something wrong with it and nothing of the underlying idea has changed. So very, very interested in Avalanche. Part of my venture capital play. You guys will get the private newsletter update tomorrow. You'll have more of my insight on that one. But for now, I don't really think about price too much. I'm thinking about the long-term conjecture of what the potential is here. You see this nice support resistance line we kept hitting up above. We've now jumped across it, touched it, and then jumped back up. And it looks like right now we're trying to fill this gap in the VPVR right here, because that will really round out this whole area between $38 and $44 effectively. So it looks like we're just trying to fill this gap, and then I believe we're going to jump across the creek here quite soon. I believe there's a lot of momentum in things like this. Even Aave in its trading range as well. It was a little, we went over this with, I think it was 1 inch too, but just some of these potential UTAD tests, whether they're buying climaxes or not. I do believe that they are buying climaxes, not distributive signals, which is another reason why I think we're still heavily into the bull market, is because I'm not seeing distribution here. Although what you could see is a rounded top move into reaccumulation after decline. So we've seen some of these before. For those of you that have been studying with us for quite some time, you'll recognize these reaccumulation schematics. They look like this, where you have a breakout to the top of the box and then it comes down, hammers lower. So we have a breakup to the top, comes down, hammers lower. Ethereum did this, Bitcoin did this. We've seen these patterns before. You start to recognize how they look because you get part of the box that looks a little bit distributive, and currently Avalanche is looking a little bit distributed, or sorry, Aave, such similar names. Avalanche. Aave here is looking like somewhat of a rounded top here, and this supply signature and this test, this UTAD potentially here, looks like a micro distribution. Again, if it is a partial distribution, I believe that it does something like this, and you have a reaccumulation after decline box, very similar to what KNC and Band did as well. Tom Biddy, nice, another super chat, says, I absolutely love this channel. You're always so calm and collected about the market and always looking at the longer time perspective. Peace and love. Well, thank you for the kind comments there, Tom. I appreciate the support. We're always trying to learn more and grow with that as time comes, just because there's like an endless supply of information to go over. So it's a really, really fun thing. Awesome. Thank you guys all for the kind comments, by the way, as well. I see that. I don't want to go over all of them, but thank you for all your support. Yeah, so that's just my kind of simple breakdown for this evening. I think next week I'm going to start doing morning shows and see how those go. We've been doing afternoon shows. We've tried a few evening shows. We haven't done morning shows yet. So we're going to try out a morning show type idea and see how it goes. Thank you guys all for joining us this evening. I hope you enjoyed this evening's episode as well. Give us a thumbs up if you like this content. If you're new to the Bear family, please subscribe, hit that little notification bell, share it with all your friends and family. I'm going to be doing a live video every day. It's one of my personal goals, just to see what happens, because I've never done it before. I've done videos often, but not every day. I think YouTube likes you more when you do that, so I'm going to try to make YouTube like me. Try to appease the YouTube gods and to make content every day. So we're going to try mornings next week and see how that goes. I'd love to hear your guys' advice and feedback in the comments down below. Do note that I do have to privately approve them all because there's just so much spam and crap content that people try to shill by. So I delete a lot of comments. So they're all held privately before they get passed through the TIHO check mark. Yeah. Oh yeah. For those of you that didn't join the private den yet, don't do it because I haven't raised the price yet. And I'm going to do that tonight. So you've got like maybe an hour or two before the price doubles. So wait to have doubled the price before you join, okay? Anyways, we'll leave it at that. Thank you guys all for joining us. Tio with the Arcane Bear. We'll see you guys in the next episode.